The Rebel Capitalist Show.
What I'm thinking through is you have all of this capital going into this new movement, this paradigm shift in the way that we use energy, if you will, or with stakeholder capitalism versus shareholder capitalism. I've done a few videos on that. Does that take a lot of the investment dollar away from the future production of oil or coal? And I'm sure you see where I'm going with that, right?
There's a major transition, but here's the absolute key part. There's going to be a cost. It's not a tax, it's a cost. Like an iPhone. You have this iPhone here. There's precious metals in there. That's an input cost. One of the aspects I talk about that I really want everyone young to think about, because it's an incredible opportunity, is carbon is an output cost. It's an item that you have to deal with today. But the corporations like Shell they know internally that they have to do this. So they're dealing with it now. There's S1, Scope 1, Scope 2, Scope 3. I explain all that in the book. The point here is there is a cost to doing good business, but that reduces their borrowing costs and it increases their shareholder audience, the number of investors that can come. Mm-hmm. And you're going to start seeing in 10 years, these companies have to go green oil. And I came up with a math formula doing it called GBOs, green barrels of oil equivalent. And, I write about how they're doing it. And these big companies are asking me, hey, let's go through this. And it's happening in real time. So yes, there's a cost to it, but that arbitrage of the value, just like an investment, there's a cost to investment and you get a big return. That's exactly what's going on. Now, is it going to phase out oil? It's going to, over time, phase it out. But it ain't going to be over the next day or 2 years.
Yeah, but do you think we have that supply-demand imbalance? And what I'm saying is the supply of oil continues to go down because there's no capital reinvesting into the oil because of what you're referring to. But demand, although over the long run it may go down, it's still at a level that's pretty high relative to the decrease in supply. Therefore, price goes up. I mean, could we see a world where there's all this opportunity on the green side, but yet the prices are also going up on the old dirty side with traditional oil and because there's no reinvestment there, therefore supply going down.
Here's the key.
Yeah,
there's been hundreds of billions of dollars invested in the technology to increase the extraction of these fossil fuels, mainly oil and then natural gas.
Okay.
And I used to debate guys. I remember my good friend Rick Roll, we were partners in a fund, and he thought I was crazy that fracking would get under $75. And I go, Rick, this iPhone today has more computing power than Apollo 11. Okay.
Right.
The cost of fracking is going to get incredibly lower. At that time, a 16-stage frack this is incredible. I said they're going to get to 32, 72. They're doing over 128 stage fracks today. Yeah. And fracking, if the resource is right, is economic at $35, $40 oil. So this whole concept of peak oil and peak gold is not true. And I write about that in the book and I explain why. But what is true, George, this is really key. Where did these North American companies, these big companies invest? Well, they went to where the oil was, the low-hanging fruit. And 85% of all the capital raised in oil and mining, all these places went to emerging markets, places in Africa, places in South America, like Argentina and Peru. And now those governments are going to increase their share of ownership, just like the Middle East. Remember, all these deposits like Saudi Arabia, when I went to Kuwait and Iraq and all these places, those were drilled by the Seven Sisters back in the day, okay? That was North American and European money that took the risk to develop these resources. As they were developed, the nation, the sovereign companies started
nationalized them,
increased taxes. That's what's going to happen. There's peak tax, there's peak government stupidity, and they're going to increase the royalties, increase the government share, and they're going to use it. And you already see Argentina rattling the cages saying, oh, these companies don't keep our environmental concerns at an Argentinian standard. They're using a North American standard. I've been to Argentina many times. One of the largest landowners is one of my closest friends. You're going to tell me that the Argentinian mining standards are higher than North American standards? What a bunch of bullshit. But the reality here is they're going to use that, and they're going to have all the NGOs on their side. They're going to have the local population on their side. And the government are going to slowly take that ownership away from these foreign companies. So be very careful. So that's the transition that will be happening in the resource sector.
A lot of cross currents there. You've got the cross currents with the capital. You've got the cross currents and potentially, I'm talking about the old school energy, decreasing in profits, nationalization, a potential decrease in demand. How does a central bank digital currency play into this? Because whenever I think of a central bank digital currency, my mind goes directly to, okay, we all have an account with the Fed, as an example. This includes business entities. Therefore, it gives the Fed the ability to circumnavigate the banking system, where now they're reliant on the banking system to create more currency, create more dollars through the extension of loans. But if they're able to do that themselves, then the Fed can create dollar-denominated loans in the real economy, but they don't. Their balance sheet is infinite, and they're not constrained by a P&L. So what I mean by that is the Fed could just lend money to whomever industry or political group was in favor at the time. So, I just see this playing out with what you're referring to, because let's say we get Biden that continues to push and push and push and push. Well, the Fed can go ahead and without the private sector, the Fed could go ahead and directly fund those businesses that are creating this infrastructure and this Green New Deal without even having to get the commercial banks involved, if we have that central bank digital currency.
You nailed it on the head. It's about velocity of capital.
Okay.
So the way the industry, the banking world, the economy was based on was the gold standard. And I really break it down. George, I really hammer down and prove, why is there a 2% target? Did Bernanke just pull it out of his ass and said, 2%?
It seems that way.
No one asked the question. Well, I prove why. Do you know why it is? I'm probably like the worst marketer in my book, but I don't care. My life doesn't change whether people buy it or not. I truly want to explain the knowledge I've captured in 20 years of traveling the world and building mines around the world.
I would assume because they need debt to continue to increase. They need the amount of dollars to increase.
It's gross, but why 2%? Why wasn't it 3%? Why not 5%? Why not 2.2%?
Oh, that I don't know.
Because over 115 years of mining the gold standard, the natural growth of mining of gold was 2%.
Gold. Right.
So I went through all of the gold mines, and that's where it was based. What we have to do, George, and you're a leader in this industry, there's a whole generation that look up to you. You have to explain to people that the old school rules, the gold standard rules of using 2%, it was the New Zealand Fed that made it that 2% target. They had crazy inflation. They said, let's get back to the gold. They didn't call it the gold standard, but they went to 2% target, and it worked. They reworked all of New Zealand. New Zealand was a basket case when this inflation was at 8-9%. It was horrible. And the Fed fixed it. Now, this old world of 2% is no longer this framework, this P&L that you talk about. That was capitalism 1.0. That was what we learned. Keynesian economics is what we studied, and that's what it was. The transition into FMC, now it's a bit different. We go quantum. Keynesian's evolving to now FMC, which they did for a period of time under Marin, the most powerful Fed chair in the history of the Fed. Now it's going back to that, but it's even more powerful. Now you got Jerome Powell and Yellen, and Yellen was on the other side. So you're telling me we're not in a coordination? Of course we are. And the CBDCs that you're talking about are going to be coming. Jerome Powell's already announced it, and I talk about all these things in my book. And the guy that was really pushing this was actually a Canadian, Mark Carney. Mark Carney's a great mind. I actually like the guy a lot. He was Canada's, Fed head for the Bank of Canada. Then he went to the Bank of England, and he was their Fed head. And he's been for 6-7 years exploring, hey, what's this going to happen? He's a really interesting guy. He just wrote a book called Values, which is a really good book. I recommend it to everyone. Tough read, very more of an academic read, but brilliant mind. He's at Brookfield now, and he's got this huge agenda on this carbon. It's where it's going, George. And these CBDCs, one of the key parts that they're trying to explain, $9 trillion has been printed last year across the board, right? But where did it go? 5 trillion of that, the billionaires index across the world, Russia, China, America, Canada, take all the billionaires around the world. They had their biggest 12-month net increase in net worth than at any point in history.
Right.
Of the 9 trillion printed, they increased by 5 trillion. What the government's going to be doing, the CBD, the central bank digital currencies, the CBDCs, are coming, and it's going to try to control. Remember, government's all about control where these things are going. Of course, they're not going to be able to do it, just like they didn't think that the billionaires would get 5 trillion of the 9 trillion best increase. It was the rich who got richer.
Right.
So all I'm trying to do is educate people where the puck's going, how to best position yourself. And George, when I started out in this game, I knew nobody. In fact, I grew up from immigrant parents in East Vancouver. I went to university on an academic scholarship. Like, I am like the story of a Canadian dream, right? Like, hardworking parents, lots of love, but I didn't even know anyone who invested in the stock market. Today, I'm the largest independent financier of resource projects in the world. And if I'm sitting here going, wait a second, you know, when I started out, I had to fly around the world and understand geology and real economics and all these things that were so volatile. And I had NGOs against me. The indigenous people didn't want these mines. I had protesters, permitting. It was a really risky game. This is the first time in my 20-year career that I have seen a sector that has a bigger growth profile than Bitcoin, than oil, than gold, than copper, than rare earths, than uranium, any commodity I've ever seen. And if anyone watching this is just listening, start educating yourself on carbon credits. I cannot bang the table hard enough about, and it's not about a government tax. It's not about the government trying to suppress the oil companies. It's none of that. The oil companies are going to do it because it benefits them, because they're going to get a lower cost of capital, which means more free cash flow. And the green energy companies are going to keep growing and doing this. The cost of power continues to go lower. And this old framework that we were at, and remember, I'm like you, I'm a gold guy. I come from the mining and oil and gas world. And I'm saying, guys, this is where the puck's going. So you're either with it and try to position yourself to get very, very wealthy, and you're not going to deal with the protesters and the permitting issues because our agendas align. It's just, we're going to make a huge bundle on this. And it's not my numbers. Goldman Sachs is all over this. The World Bank numbers, Barclays, Morgan Stanley, they're all getting into this carbon economics of all this stuff. And there's a fortune to be made. The difference is the George Gammon of 20 years ago can do this wherever he is, whether it's in Moscow, whether it's in Africa, whether it's in Vancouver, whether it's in New York, LA. You don't need to go fly to Nevada and get the gold mine. These are projects that you can work using data available, technology that is available today. And they're talking about a growth of 100-fold. I look, they're bankers, they're suits, they're selling something, but let's just say it doubles. Let's just say it doubles, which I have absolutely no doubt it will. You're not going to make 2 times your money. You're going to make 10 to 20 times your money. And the sector, Goldman Sachs is saying by 2050 is going to grow 100-fold.